Good morning, everybody. How's it going? Did you miss me? I'm sorry, my voice is a little bit hoarse. That's what happens when you go to Vegas for a few days. But Spencer Israel, welcome to Pre-Market Prep. I'm glad to be back in the saddle. First off, it was great seeing those of you who are in the chat and watch the shows. Great seeing you in Vegas. Met a bunch of fans. And it was just great to meet everyone. So I had a fantastic time. If you were in Vegas, put a 1 in the chat so I know who was there, because I know there's a bunch of you in there, and it was just great to see everyone. I'm very glad to be back. But it was a fantastic weekend. If you were there, if you got value, if you learned something, drop me a 1. I need to know who was there. But we got a lot to get to today, right? We're going to talk about the market. Obviously, it's what we do every day. Was Thursday the bottom? That's the question, right? Was Thursday at the bottom? We'll try to answer that. We're going to talk airlines. Hey, Jaeger, there. What's up, man? How's it going? Airlines, hostile bid, a lot going on. Tim Quast, market structure edge. So here we go. Smash the like button. Let's get the show on the road.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Let's get Mr. Elconin on the show. Joel, good morning. Did you miss me?
A
little bit.
You were gone?
Yeah.
Mitch did a good job. We had a good couple days in the markets. The markets finally rallied without your selling pressure. But let's recap things real quick. We're down 10 handles. Nice range overnight. We took out Friday's high. We came back down under 4K. Now we're down 11 handles at 4,009. Big day in the market. Really a big day here. Crude down 87 cents, 109.62. Gold, that's down 11.30, under $1,800, 1796.90. No inflation hedge there. Silver holding on to 21, up 6 cents at 21.07. Bitcoin under 30K, down 250, 29,785. And Ethereum futures, they're in the red too. They're in the red by $37.50. Let's bring in Triple D. And Triple D, some days are more important in the markets than others. And after Thursday's price action, after Friday's rally, after doing my numbers over the weekend, we got some big levels here to hold to see if this is just another dead cat bounce, or we got some more work to do in the 4,000 handle.
I mean, that's to be determined today. So we've had the nice bounce. We felt, at least I felt on this show like 2 days ago that we had some capitulatory selling in the ARK names, in the high growth names, and the noise. And please ignore the nasally voice. I'm fighting some type of cold again. This is like nonstop cold season. It's May. You'd think you'd stop getting colds, but apparently with COVID out there, it just doesn't stop. But we've had a significant rally. So the question is, and you can say, what significant rally? ARKK 35 to 43, that's a quiet little 20% rally in 2 days. So is there going to be selling pressure into that? Probably. But was that, a capitulatory short-term low? I think so. I think it was in a lot of names. I think the S&P started to follow suit. Like I said on Friday's show, it was ARKK and the growth names that let us down. I believe it will be those names that lead us out. So we'll say so far, so good.
Okay. Actually, on that ARKK note.
I was ready for you to pop it.
This is an interesting stat. This is crazy, guys. ARKK, which it's become its own animal right now, because the rest of Kathy's ETFs, ARKW, ARKF, ARKG, they're all losing money, right? Money is leaving those funds, outflows, right? Net outflows. ARKK, however, is not just taking in money. It's taking in a lot of money, okay? Wow. ARKK took in more money more new money came into the fund last week then has come into the 3 largest commodity equity ETFs. So XLE, XOP, and XME. Those are your 3 largest commodity equity ETFs. Then they've taken in all of 2022. More money went into ARKK last year than has gone into those 3 ETFs or last week than the entire year so far. Okay, so it's taken in $450 million year to date. No, I'm sorry. That's what the other ones have taken. ARKK has taken more than that. ARKK has taken over $500 million. It's crazy.
People can't stop buying the dip. They can't stop. You know, it's action like that makes me scared that we haven't seen the low. And I don't know, nobody knows if we've seen the low. People keep saying, you say short-term low. Do you mean this is the low of the year? This is the low? No, I just mean we're oversold and we needed a bounce. Nobody knows if that was the low. I think eventually, somewhere down the road, we'll probably get a retest again. But I think this short-term they're oversold. But that's crazy to think that, you know, you have a fund that loses 70% a year and people are just jumping in as fast as they possibly can. It shows you the buy the dip mentality is still there in all these stocks.
There are a few theories here, and the chat is quick as ever. Okay, so first the comment from RFCCW 949. Yes, Spencer, you know shorts can show as inflows. That's correct. It could be short covering because that's buying, right? So it could be some short covering. It could also be, as someone else pointed out, Saston, there are several ARK derivatives out there. It could just be the ARK derivatives are causing some flow funkiness. It could also be just one person. It could also be just one really, really big pension fund. We don't really know, right? Flows in itself are sort of a vague stat to begin with. They don't really tell us that much, but it is just wonky how this one fund, for whatever reason, can just take in so much money week after week, even though their performance has been so bad. So, anyway, I saw that stat. I wanted to share it because I thought it was cool.
So shorts coming in, so that shows up in that respect too. So to me, that kind of really negates a lot of that.
Well, we don't know is the bottom line.
What do you think, Dennis? You're the market structure guy.
I don't. I think there's still just people that believe. I mean, whatever you want to say, shorts, longs, it doesn't matter. There's still it's unbelievable that she has a net outflows.
Yeah,
I mean, when you have crazy performance this bad, you know, we're nickel and diamond for maybe it was a few, you know, people who were bearish buying, you know, maybe it was, you know, that's showing up, you know, but you're nickel and diming it. I mean, the bottom line is she hasn't had any net outflows and she's been one of the worst money managers for the last year and a half. So people believe. They want to believe. They're going to continue to believe. They believe. Joel, I talk to, you know, some of these people who are bag holding these stocks. There are people that think all these stocks are eventually going back to the highs.
Yeah.
There are people who are coming in and saying RIDE, which is a $2 stock, it has went from $1.50 to $2.50. This is the run. It's going back to $40 now or to $30.
Which stock is that?
Ride, RIDE. It just had the huge run, Joel. $1.50 to $2.50. They're saying this is it. It's going to be $30 here by the end of the year. I can just feel it. That's what is out there. So, I mean, there is full belief still that all these stocks.
Well, then that makes me absolutely think that we're nowhere near a bottom.
Yeah, it does.
That makes me think
it makes
that
me scared
until she pukes all over the street and dumps everything and has a huge outflow day, then that's the kid. That's going to be capitulatory.
And people keep saying she's going to blow up, but this is an ETF.
Yeah.
So this is daily. So it's not like all of a sudden, you know, she's out of money. I mean, this is, you know, what the whole creation redemption and obviously keeps the prices in line. This isn't something that all of a sudden she's just blows up. I mean, until she starts getting some net outflows, she's not going to blow up. And she's going to get paid and she's going to stick to her guns. She believes her strategy. She believes the market is wrong. She may end up being proven correct. I doubt it at this point in time because, you know, just for the, you know, ARKK to get back to the highs. I mean, the stock's got to go up. What was the all-time high ARKK? $160. It's basically got to go up 300%, 300 to 400% from here, just for her to get back to where it was. Yep. So, you know, that's a lot of years of growth there. Tough to come in and say that this is the low. I felt like we had a short-term bottom. I'm going to say, to everyone who's asked me on the weekend, was this it? We don't know. I know we were oversold. I know we were due for a bounce. I called that bounce. Where we go from here, we're up 20% on the lows from ARKK. Where we go from here is anybody's guess.
I think just like just like everything was mass, we had like the separation like on the way down, right? The stocks that, like with the S&P, well, that really wasn't doing too bad, right? But these other stocks did. I think that's the kind of recovery you're going to have. I think and I don't know if I'm a big mega tech. I don't know if it's going to be there. I think it's going to be very selected pockets in the market that recover. I don't know if it's going to, growth or value, whatever, but I don't think we're just going to have the yippee buy everything, be everything going up at the same time. I think it's really going to be a tough market, really a stock pickers market for at least
sure.
until we get inflation under control.
Stock pickers market it is. It has been a stock pickers market for the last year. Obviously, if you're picking oil stocks and picking certain sectors, you're doing very, very well in 2022. If you're in anything else, you're not doing as well unless you're on the short side. So it is a stock pickers market. That will continue. When the VIX starts getting up over 30, everything starts kind of moving together, but that's not going to last. I will tell you one thing, the VIX isn't going to be, over 30 forever here. It eventually starts to leak out and starts to come back down. So as we try to find our happy home, we repriced all this risk, all this free money from the Fed has had a massive repricing over the course of the last 4 to 5 weeks. And now it's the digestion phase. Do we have more repricing to go, or have we priced in enough? Have we priced in a hard landing instead of a soft landing? We've priced in a lot of bad stuff. Don't kid yourself. What was the Q's down? 30% from the highs?
Yeah,
close to it, weren't we?
Close to it.
Like that is a significant sell-off. 408, we got down to 309. So yeah, close to 30% off on the index that most widely reflects what this market really is. So we've priced in some bad stuff. There's not a lot of 25 to 30% sell-offs over the course of the last, besides the COVID low, Joel. Have we even had 25 to 30? How many SPY 20%ers? We had one in 2018. That was interest rate concerns. We had COVID. But then before that, you probably go back like 2011, 2012.
Wait, I'm sorry. What was the number you're going off of? 20%?
Yeah, even if we go to the SPY, because we touched 20% on Thursday. We just
20%, I don't know, but 10% is pretty normal.
10%. 10%ers.
Late 15. Look into this. I mean, because we already talked about the end of 18. Beginning 18, we had a little dip too. So, no, it's been quite some time, and the monthly doesn't give you a lot of love either. There, like how often do you see like a spike up like that on the monthly, and then we're gonna have to come down there and hit that 1, 2, 3 months in a row before you can really get a lot of just not one little touch, but. Well, we'll see. We're trying to rally here today. Like I said, Thursday's rally was big, right? The off the low. Friday was nice follow through, and then today, you had the Friday the weekly high, just everything. When the daily and the weekly numbers line up for me, like right at the same area in the S&P, that means it's it's go time. Like let's hold this area and go north. Or else we'll probably just have the back and fill towards the low. We don't have any big catalysts this week, do we? I mean,
earnings are quiet. I got them written down. Retail. So retail earnings season is what we're entering.
Ooh,
Tuesdays, Home Depot, Walmart, SE, which will be interesting. Cisco, Target, Lowe's on Wednesday. Applied Materials, Palo Alto Networks, Kohl's on Thursday. Friday, we got Deere and Foot Locker. Tonight, we do have Take Two. I have a position in that. That's pretty much it. So it's quiet on the earnings front, but there's a couple big names there.
We've come to this is just about the final week of the earnings season here. There's always going to be some stragglers like Costco and Nike that are always way late, but this is going to be the last hurrah of earnings. Let's talk airlines here for a second, guys. We do have some airlines news. It's been a hot second since we've talked about a hostile takeover on this show, but that's what we have here going on today. JetBlue is going hostile in its bid for Spirit Airlines. They have sent a tender offer directly to Spirit shareholders. So let's pull up that SAVE chart. JetBlue is offering $30 per share in a tender offer, but if Spirit Airlines execs come back to the table, JetBlue would be willing to pay $33 per share, is what they say. Spirit Airlines has already rejected JetBlue's prior offer over antitrust concerns. We know that they're going forward with their deal with Frontier, which is ULCC. JetBlue says, no, don't do that. Shareholders, don't approve that. Come to us.
Shareholders like money, so I'm going to say that they'll have a play with the shareholders here.
Yep.
I'm looking, and I had this when I bought the Coles on Thursday. I thought about buying Save too, just for this reason, that I thought that there could be something happen here again. Same reason about Coles, really. I mean, it's coming to a value area. Save, it's hard to say a value area. I mean, they're burning cash still, but does it eventually not burn cash? Maybe. It was $80 back, or $60 some back in 2019. We're $16. Is there potential for it, the takeover, to go through 33? Yeah, I think so. I mean, at 16, I don't know if I'm chasing it at 19 here, but maybe people forget about it the next couple days again. I think I'd take a shot at 16, 17 if it was to get back down. And that isn't happening today, though.
Street is showing absolutely no faith in this going through. I mean, what a discount.
It's already been rejected twice, Joel. So that's why there's already another merger on the table. So
and
break another merger.
Yeah, break another merger. Antitrust concerns. I don't know. I wouldn't. I don't want to. Just like I haven't wanted to own Boeing. I don't own these airlines. I don't care about the merge. Look at Boeing. Holy mackerel! That's almost
Boeing goes
back
down
to
every
it.
day.
Yeah, your COVID low. Hey Spencer, is it your birthday, or are people just messing with you?
It's not my birthday today. It was my birthday.
When was your birthday? Did we miss Spencer's birthday?
That's okay. It was yesterday. It was over.
Oh my gosh!
It doesn't count. It doesn't count. Weekend birthdays don't count.
I'm looking. Hang on. I'm adding that to my calendar for next year right now. How the heck do I not have that? Spencer Israel, non-birthday. Happy birthday, Spencer.
For whatever it's worth, I do have your birthdays in my calendar.
That's horrible. That we missed
We're
this.
terrible.
It's
Absolutely
okay.
terrible.
Listen,
we're bad friends.
Oh man,
we're bad
I can't
friends.
believe it. I should pay more attention.
Joel,
to
I'm
these
blaming you for all this.
But, okay.
Dennis, you were up late. I'm sure.
Happy birthday, Spencer Israel.
Hey, Dad, did you cross?
Let's sing him happy birthday.
You're 31,
happy
right?
Birthday to you.
Yeah, I'm 31.
Oh, my nasally voice is just killing me right now.
Yeah, don't sing, Dennis.
Yeah, don't sing. It actually hurts everyone more.
Yeah,
31. Wow.
Yeah.
Okay.
31. I remember when I was 31. No, not really. It's too many years ago.
Wait, just to tie a bow on the Spirit thing, June 10th, everyone. June 10th. That's the date of the Spirit vote, shareholder vote. So,
what about these other airlines?
If you're following the story, if you're a Spirit shareholder or you want to be or trading this at all, June 10th is your magic date. That's when this story could end. So there we go. Oh, Pulverizer says I look old for 31. It's the beard. Without the beard, I look like a baby. So I gotta keep the beard because I look like a child.
Boom, boom, boom. Wow. What about these other airlines here? American Airlines.
Thank you, everyone in the chat. Sorry. What
about this reopening trade?
They've all been killed, Joel. Everything got killed. This is what I've been talking about, that everything was oversold. I mean, we had the reopening trade going mid-April, and they pulled the rug out from absolutely anything. The reopening trade hasn't stopped. I mean, the Disney World numbers were fine. The parks were packed. I mean, this is just, we don't want to own stocks. And they don't care. Cruise lines, we know I bought NCLH last week. I'm already up, I don't even know what I'm up in it there, but I'm already up significantly in one day. But I mean, there's just they've sold everything off. So pick your stock. If you've got stock selection, again, we rallied now significantly off the lows, but on pullbacks, I think you got to have your list. I think the time to be 100% cash has passed. I said that Thursday. I said it Friday. I'm continuing to say today. I think the dips continue to get bought here, at least in the short term. Long term, nobody knows anything. Meteor could hit us next week and it's all over. I mean, there's, nobody knows long term. Short term, though, I feel like dips are going to get bought. I feel like the path of least resistance for the short term is still a little bit higher.
I want to talk about Netflix here for a
Oh
second.
yeah.
If we can get off the airlines, because well, I'm gonna reach out to Michael Pachter today, see if we can get him on the show later on the week. But Michael Pachter, our longtime friend, friend of the program, longtime Netflix bear, officially went neutral on the stock a couple months ago. In I think March 9th to be exact. He is now going from neutral officially to bullish. He is going to outperform on Netflix. He's bullish the stock. He thinks in 12 months the stock could be at $280. So $90 from here. He likes Netflix. He thinks it is this is the I think the money line here. He likes Netflix because he thinks it's a slow, immensely profitable, slow growth company. He never bought into the Netflix hype, but he likes it because it's got some value.
It's turned to a value stock, the same reason that I bought more on Thursday. So I've averaged myself down. Never frown, average down, taking a page out of Kathy's book
That's
here.
it.
So bought it absolutely horribly when Ackman bought it at 360, and I added more to it. So because it's coming to the value area here now, and I believe in Reed Hastings, I don't think it's going away. So instead of selling like Ackman, I actually doubled down. So we'll see what happens. It's come up nicely from, I just bought it at 167. I almost got that one at the low. My original purchase was at the low too, though. I bought it really well and went up like 20% for me in 3 to 4 days after Ackman bought, but I didn't sell, and obviously that was a mistake. That's been the mistake of 2022, not selling. So can we get Packer
Yeah,
on the show?
I was thinking of reaching out to him too last week, to do the guest and everything. But also I have to say is, we have a lot of different analysts on the show. We talk to a lot of different people. I think that this is just and I don't know what Netflix is gonna do in the long term or whatever, but I just think it's just one hell of a call. To be bearish as long as he was, to be wrong as long as he was, to just wait it out, wait it out, wait it out, and things change. I mean, I think the only bigger thing would be if Gordon Johnson went bullish on Tesla.
Could you imagine?
That's
That will
never,
never happen.
never gonna happen, Joel.
Never, ever,
Never
not in
gonna
a million
You
years.
never know. You
Never,
know.
ever, ever will
Never.
Gordon
I'll be
Johnson go
dead
bearish.
before
I love Gordo.
We're
I get
gonna
him
put
back.
it on Gordo's tombstone. 150 years from now, it'll be he took Tesla bearish to the grave. He will take that to the grave. There's absolutely no way Gordo will ever go bullish on Tesla.
Well, I used it more to show my respect for Michael Pachter and to look at his stock and wait it out and do it. So we'll see. I mean, it's interesting. I mean, it's not he waited a long time and a lot of price depreciation to do it. Man, I mean, right now I'm not really going to give you any technicals on this one. You're so close to the low of the move. If you want to take a shot here. You got to take some risk. I don't think things would get real crazy. You need the market to rip, number one. You need the bottom to be in, and you need to start to get into that gap. Besides that, all these other levels are kind of meaningless. You might see some other people jump on the bandwagon too over the next couple days, but trading right near the highs of the pre-market session.
What was I about to say on Nell? Oh yeah. At FinTweet over the weekend, we were it was great to have we had Brian Shannon there from Alpha Trends,
Oh,
and
Brian's
on
great.
Friday morning he gave the first presentation, and he made the whole room repeat after him, and we all said together, "Don't buy stocks in effing downtrends." The whole room said it
That's
as
the F word
one.
too with it.
That is what Netflix is in. It is in a downtrend. So it's gone up now. What, 2 days in a row? Today would be day 3.
That's a good rule.
But it is
It's
in
a good rule.
downtrend.
If you're a swing trader, absolutely,
Yep.
very good rule. It depends on your time frame. There, I'm a scalper. I can pick up short-term moves in downtrends, but I tell you, Brad, he's right. I mean, overall, it's a lot easier to sell rips in downtrends than it is to buy dips in downtrends. And I mean, that's why I always say, look at where you're trending. you're selling stocks that are that are trending
How does he
down.
define the trend? How does he define his trend? Like what chart does he use? What time frame does he use for that?
I think Brian's more
I
like
think
swing trader, right?
yeah. I think it's also more like I don't know the answer to that, but I imagine it's mostly like an eyeball
Because
test.
Dennis, some of it have it your like some of your best long term investments, like when you bought the Qs in 2000 and some of the other stuff we bought over the years. Couldn't that be classified as
Oh yeah.
stocks in major
I,
downtrend?
I'm of the long term, and in swing trading, he is absolutely correct. Long term, but again, if you're buying long term and then you're buying the stocks downtrend, why not wait till it breaks that trend? Because if things keep getting down, you think you're buying Kathy long term at 80 and then it's 35 in your face.
Mhm.
So, I mean, there's a point there that, wait until it stops going down before you start striking. I have had some excellent investments, Joel, just coming in when it just seems completely irrational. I just did it again, but I've been killed that way too. So, it's a tough it's a tough game to just say this is going to be the bottom.
Yeah. All right. Let's move on here. As someone just turned the lights on behind me, but maybe that's a sign. Let's go to some earnings here. We do have a couple this morning. Let's go with Weber Grills, one of the relatively
That
recent
wasn't on my
IPOs.
list.
Oh, they're reporting this
Adding
morning.
it now.
Yeah, WEBR,
Gosh,
relatively new one, right? Only I think they SPAC'd. It was last summer.
was it
If
SPAC?
memory serves. I believe it was a SPAC. One of them was a SPAC. One of them was an IPO. I don't remember which one was which because we have Cook and we have anyway. Weber Grills this morning. They're losing money. Okay, the losses are getting wider. Their sales came in below estimates. Their sales guidance came in below estimates. Not what you want to see. Market is unforgiving.
It's a very unforgiving market. It kind of fits this description of high-end expensive stuff. We're going into a recession. Those grills are awesome, but they are like twice or three times as much as a normal grill. So it's a high luxury item. Rich people are going to buy them still, but you had people paying up when we had free money all the time, and it made us not want to go buy a $1,500 barbecue when money's getting tighter. So this is the kind of stock I don't want to own because I still believe we're going into a recession.
The grills are too good.
They're awesome.
Yeah,
Grills,
they
Joel.
gotta make them cheaper,
They don't break.
so they break.
They don't
Like
break.
I've had the same one. I don't know for how long,
Yeah.
and I've replaced the grates. I've had someone. I mean, and it just keeps on going. So they got to start make. And well, there's another company that I was in the same thing too. Like Tupperware. Tupperware never wears out. I mean, they got to start making cheaper grills. Not much to say. New all-time low. If you want to look at this pre-market low, pre-market low comes in at 585, so you got a little bit of a bounce. And isn't there another grill stock too?
Yeah,
Isn't there?
Cook. COOK. Cook.
And
Oh,
I guess
that may have been the SPAC. No, it wasn't. I don't know. One of them SPAC, one of them IPO. I'm not going to remember which is which. I feel like, but, yeah, they're both down.
I don't know. I mean, people are getting out, not buying grills, and the grills are too good. So it's hard to be bullish. Except if you go buy the hamburger stand up where up on between Toronto and wherever that is, Algonquin Park.
You like that, Weber's? That's a different Weber's.
It is.
Yes.
I know.
What about what about Wix here? Wix.com, WIX, another pandemic darling. And they're cutting they had earnings this morning that missed, and they lowered their sales guidance. So not what you want to see, and I don't know.
Dips will likely get bought. Yeah, okay, so we've had some money managers are now like, oh, did I miss it? So that's one thing you have to consider when you're selling the dips now. And it's been a play actually through this earnings season to sell the dips because they keep going lower. But you've got sentiment that's a little bit head scratchy here right now that they're not totally, I don't want to own any stock. So I do think that you have the potential for some of these dips, even on Weber or Wix, to get bought for the simple reason is that money managers who just missed this 20% rally in ARK might be looking at pullbacks to try to get some more exposure.
That's an interesting thought.
Yeah.
I traded down under 62. You know what? This is gonna open up right at Friday's low. So you know, if you shorted the thing on Friday, or you've been shorted, you're right here at Friday's low. I'd even look at Friday's low and then Thursday's close, 63.28 to 65 and a quarter, a little bit of a buy zone. I think if you hold that, I think well, maybe you get back up. A lot of people would like to see the close at 71.19, but I agree with you in this one. I'm not after the run it's just had, the 2 days up and then now just getting hit on 52,000 shares, I'd be more inclined to try and buy the dip in this one than I'm not selling it down $6 here
No,
on 52,000
It's a good thought though, because if the market is going to bounce, then I suppose you guys are right that even though we've seen every rip get sold, and every dip get sold more, dips will get bought in a market that is bouncing.
and even
also,
the Kathy phenomenon. Like,
yeah,
let's say you've had a big short on this thing, and
Yep.
you were looking for $50,
Yep.
and then all of a sudden it's like 70. You're like, oh man, maybe I'll bring this in at 60. You know, I don't know what the short interest in this is anything, but I know if I would have shorted it on Friday and took it home and it closed near the high of the day, and I could bring it in $6 lower. I know what I whatever your average cost was. It's a good opportunity on the earnings report.
I had this epiphany, guys, on like Friday or Saturday, one of those days, I forget which. I had this epiphany, and remember how in 2020 and even 2021, we talked about this. Every single buy looked like a brilliant move, regardless. Anything you bought, you were probably up, and you look really smart. And now it's the exact opposite.
Yep.
Every single sell, you look and feel like a genius. Okay,
Yeah.
and I've done this. I was looking at something. I think I was looking at Altria or something, whatever I had for a couple days, and I sold it. And I was like, wow, I had great timing on that one. No, I mean, yeah, I did, but it was just luck. But
It was a downgrade. Someone downgraded that.
Everything I've sold has gone down more after I've sold it. So I feel like a genius, but it's not me. Just like it wasn't me on the upside, it's not me on the downside either.
Same thing.
It's just the market, right? It's just the way it is. But I feel, damn, do I feel smart right now?
Samesies.
Right.
Samesies, same thing. I mean, and we've talked about this on the show too. Yeah. It's just exact mirror image. The 2022 is the mirror image of 2020 in the opposite direction. It's unbelievable. Even to the charts, most of them look like that. And it's the same thing. Every time you buy a stock in 2022, you're like 2 days later, you're like, why did I buy that? And every time you sell a stock, you're like, man, that was a good sale.
That was a great sale.
It's the same thing. We said this in 2020. Every time I sell a stock, I feel like an idiot. Every time I buy a stock, I feel like a genius. It's just the exact opposite. 2020, 2021, 2022. I mean, there we are, full circle. So we basically have just given back everything from the pandemic rally. Everything. So now where do we go? That's the question. Are we continuing, now that we've given it back, do we turn and we slowly start to go higher? We got this inflation problem that the pandemic left us with, though. So that's the biggest issue why I don't want to go 100% all in yet.
Yeah. I mean, there's a lot of uncertainty. I think this is the most bearish.
That's the only thing we're certain of, Spencer.
Yeah, I know.
We're certain that there's going to be
still a lot more. We just got another blast higher here.
Yeah. Buy the dip, Joel. You guys, man. Look at it. We came in by.
Watch out. Cancel those offers, Dennis. Something happened.
You said it, man.
Yeah.
Anything happened, but you got to buy these dips.
Look at that. Wow. Yeah. That was like a little 5-point blast there. Someone just came in.
Boom. 5 points.
Boom. Lift them up, Tom. 40-25. Back off then.
Okay. We were saying when we came in, there wasn't a lot of stocks that were really trading weaker here. I was trying to figure out why the market was down. Half the stocks in my I was looking at were green.
If you look at what's up here, like your leaders, you see like Carvana leading the way this morning.
All the junks leading again.
Yeah.
Dash for trash. The trashy stocks of 2022 are the ones that are leading the way here once again.
I know. And Carvana just last week, what did they lay off? Like 3,000 people? I mean, not a great sign. I guess it saves money, but still.
People are into that right now.
I guess that's not a great thing, though, to be doing that. So that company's had a rough go of it here. But, yeah, when that's your leader, then okay. One of those.
The dash for trash has been on, Spencer. Well, you weren't here Thursday when we started talking about this.
No.
So we've been talking about this turn. You could feel the capitulatory, just to enlighten you. Maybe you're reading my tweets. I don't know. But on Thursday morning,
I read everything you say.
On Thursday morning, it kind of felt like the turn. It just felt like the washout, where people are just like, we're done. We can't take it anymore. We're
Yep.
done. And
Big
it
gaps.
turned, and you had 10% pops and like all these stocks. It's GameStop popping, like going limit up. It was like people could not stop buying it on Thursday morning because it was like going limit up. And then we pulled back in the afternoon. Like it's the same thing. Oh, sell the rip works. But then what happened is a lot of stocks didn't make new lows. And now we're trying to gain some momentum here. We're trying.
Yeah. All right. It is 8:35 on Monday, which means it is time for Market Structure Mondays. Tim Quast is not here just yet. I think he'll be here in the next 10 seconds, which is why
He was tweeting.
I know. I just saw a
He'll
tweet
be
about it,
here.
so which means
He
he'll be
never
here.
stood us up ever.
He will be here momentarily. In the meantime, I just wanted to give a quick shout out to the celebrity that I met over the weekend. If you guys didn't see it, I tweeted about it this morning. William Hung. It was great. If you're watching, it was great to meet you, man.
Well,
I
that's
don't think he's
amazing.
watching. It was great to meet William Hung at FinTwit 2022. A lot of great people were there. He was the only person that made me starstruck. So I got the chance to talk to him, got a chance to interview him. William Hung was at our event. We only get the best. So we had Mike Tyson in April on cannabis. We got William Hung
Killing
in FinTwit. We're killing it over here. We're
The
killing
guests,
it.
you're killing it with the guests.
Killing it. All right.
Man, who you guys gonna bring on next? Like Ed Sullivan or
Don't even know, man. It could be anyone. But I know who we're gonna bring on right now. It is Tim Quast, as I said. So let's get Tim Quast on from Market Structure Edge. Mr. Quast, good morning. How was your weekend, sir?
It was excellent.
Great.
You can see this background is not fake behind me, and actually you can kind of see CNBC in the background. Sorry about that.
CNBC, get that off.
Right, I'm up in the Steamboat. Haven't been here in a while, and I immediately lost weight because I jump on a bike and burn a bunch of calories. Plus, did you see the blood moon last night, or was that too late?
Oh, I forgot. Darn it. I always forget about that stuff, Tim.
It was spectacular. I was running around snapping photos. I mean, it's pretty hard to get a good shot of the moon with a phone, but I gave it my best effort. It was really a spectacular thing to see. We had a perfect view here in the mountains of the whole thing happening. It was just terrific.
That's cool.
Takes your mind off the Bitcoin.
What is a blood moon? Like, why does that happen? What's the science behind the blood moon?
It's a bearish indicator, Dennis. It's a bearish indicator.
Oh yeah. What's the science that causes the blood moon?
Right. It's actually a consequence of what has been happening in the equity market. That the blood moon is just a reflection. Technically, the explanation for it is that when the sun, the earth, and the moon all line up, they block the blue light, and so the only light that shows is light that has an orange or red hue, and that's why it's called a blood moon.
There we go. Good
there
lesson.
See, Tim teaches us everything.
Yeah,
market structure, science,
everything. There we go. Tim, what's in store for the week? We've been asking on this show whether Thursday was the bottom or not. At least for the short term, it appears to be that way. What is your sense as the answer to that question?
Well, it's so I used this analogy in the market desk note for Edge users this morning. That have you seen one of those thriller movies where our hero is poised with a pair of pliers over a bomb that is ticking down to zero?
Oh, yeah.
And he's trying to figure out, do I clip the red wire or the green wire? And it's
I like that analogy.
It is like that because there's good news and bad news. So I said last week, to self-congratulate, to quote myself, I said that if the market was going to recover, it would happen on Friday, because that would be 5 days out from this week, Thursday, May 19th, index options and futures expiration. So if you're going to make a play into an expiration state, 5 days is like 82% of the plays. It is the most popular trade by far for hedge funds, quants, and so on. Plus, Friday was the benchmark for Russell rebalances. We could see the evidence of that. So that whatever happened on Friday, that's the benchmark, which I think, wow, we're not going to actually do the rebalances till June. So what if we have tremendous tumult between now and then? But anyway, Friday was the benchmark for that. Then today would be 5 days into Friday afternoon options expiration. So once again, if the market is going to rally, and notice how the futures turned around, it will rally today because there is a bet. Then I don't know. Here's the interesting thing. So I was looking at, as I do, as is my custom, market structure data yesterday, and I looked at the entire data set that we have. And you know, we built these algorithms in 2010, but the ones that we used to calculate sentiment, but we didn't have a very good data set. So we use a data set from about January 2012 to current. So it's a decade long. And we look for, you know, weak tops precede drops. It sounds like a quaint little phrase, but that it's something we look for. If sentiment peaks weekly, that is, it doesn't have a lot of enthusiasm, that precedes big declines. And the weakest top in the data set that we have until now was in late October 2018. And that preceded the complete crap kicking that the market took into December and January 2018, 2019. Then the Fed backed off of its tightening policies. Remember that? And then the market took off like a rocket ship. So save for that and a brief little blip in March of 2020, the sentiment measure that we have now is at its weakest top. So could we have a nice little rally into expirations and then another step down? Well, it's the data would suggest that risk exists. Yes. So there's your red wire and green wire.
I just want to make a quick note on the Russell rebalance. So June 3rd is actually the important day because that's the day that they're going to publish the list of all the stocks that Russell is adding, FTSE Russell is adding and removing from their Russell indexes.
And then it feeds through for 3 more times before we get to the final.
Right, but
Yeah, they keep adjusting it.
June 3rd is the day that if you do trade imbalances like that or in rebalances like that, June 3rd is going to be your day because that's the day that the first list comes out, and yeah, they'll tweak it for that's the day when we get the first list, and that's mostly what it is. So,
and I mean, this list is easily figured out by multiple, institutions that log this because it's just, it just goes through and it
it's
goes
not
through
that hard.
Yeah,
it's not rocket
it's not
science
that hard.
to figure this out.
Right. Exactly.
Yeah. It was interesting in our data that they always peg it in May and then release the list in June, but that there was about twice the size of movements in the Russell 2000 than there was in the Russell 1000. And it may just be because the volatility in the Russell 2000 is about double what it is in the Russell 1000. So that's the 3,000 largest stocks in the market, by the way.
And Dennis, didn't you say a lot of it got to the point where you got to figure out where it's coming out of?
Oh, it gets crowded. It turns. It used to be like 20 years ago. You buy all the ads, short all the deletes, put the portfolio on, just bank coin, don't even think about it. And now it goes crowded. They get oversubscribed. I mean, it's just, and then what happens is 2 days before, sometimes it blows the other way where the ads tank, the deletes go up. And I've even seen, days on the imbalance. You think, well, there's, 20 million shares. I got to buy this stock. It's got to go up. Well, 45 million short-term traders were anticipating that. So now you have a net sell of 25 on it.
Right.
So,
well, 20 years ago, you didn't have the market maker exemption to short locate rules. So market makers will just create whatever is needed to satisfy the fills. So the prices don't move the same way. And, it brings up an important point about what happened to Terra USD and Luna. The mechanism in that stable coin is the same mechanism in ETFs. It is that you create and you destroy Luna if Terra lags, and you destroy Terra if Luna lags. That's what you do. You create and redeem. It's the ETF arbitrage mechanism, and it failed catastrophically there. And so is the ability of market makers to create stock to fill large institutional orders. That is a mechanism that can lead to catastrophic failure because it's not real. And those, I've been writing about these things for years, and then people poo-poo it because we go for years with no trouble. Then the moment the market starts to go down, we get into real trouble. It's remarkable how volatility explodes when the market tries to drop, because money can get into the market very easily, but not out. And it's not because of people, it's because of the rules and the mechanisms that we have fostered in the equity market that have screwed up that trade, Dennis. The trade used to work well.
There's a lot of trades that don't work well anymore. 25 years ago, Joel would know all those trades from 30 years ago, the ones that used to work. And everything's gamed now to a certain extent as well. I mean, everything's like, okay, we're anticipating, where the flows are going here. In some cases, they don't even have to anticipate. Like we've said, payment for order flow is a huge hedge in itself.
Yes, it is. Right. Absolutely it is.
Hey, Tim, can we take a look at ARK? Have we ever looked at ARK with you, ARKK? Because you had a turn off the low. Have we ever taken a look at that with you? I mean, it's got to be near a 1 or a 2. I mean,
Joel
no more
always
than
loves
a
to
3.
guess.
I'm
such
short
a gambler.
3.
He loves to guess what it's going to be and market structure edge, what the number's going to be.
So I hate to dash your hopes, Joel, but we don't. It's for the same reason. It's the Terra USD Luna relationship.
Okay.
The reason we don't put ETFs on the platform,
because it's not real, is what he's saying.
It's not real. It's not real. It's a facsimile.
All right, let's do another one. Let's do
we
another
can-
one. How about Netflix?
Well, we can certainly do that.
That's
And
a
by the
fun
way,
what do you say, Dennis? I say Netflix is probably like a 3.
I was
but
going to say
it's starting to turn though. It's
I was
starting
going
to
to say
turn
3.
higher.
Yeah, 3 from a 1 though, so it's turning.
Yeah, that's where we're going.
It's turning.
It's like a 3 from a 1.
Yeah.
Okay.
Let's see. Maybe it's still a 1.
We'll take a look at that. And then we should come back to this. Notice this Benzinga May 16.
Yeah.
Look at the demand side and the supply side. That's the stuff that you want to trade.
Okay.
So we will come back to that. But let's go look at Netflix. And Netflix is a really interesting example of what's going on in the market.
Survey says
it is a 1.
Wow.
It is a 1.
Still a 1.
Still a 1. So the only reason it has risen, the only reason it has risen is the supply trend. So all the fake stock is coming out, which causes demand that isn't even rising to lift the price. That's what's happening. And here's I'm going to profile this. This is a back testing engine that's built into Edge. By the way, traders, you can use it, Market Structure Edge. This is fascinating to me. Let's go back in time. Let's go back to July 1, 2021, and run a couple of scenarios. What if you bought the uptick and sold the downtick in Netflix? Well, so if you just bought and held it, you'd lost 65%. That's buy and hold. But if you bought the uptick and sold the downtick, you still lost 1%. But it's really interesting that you could mitigate your losses, and you used to make money doing that. Buy the uptick, sell the downtick, made 12%, made 7%. Then in October, right before the whole Thanksgiving meltdown, that was the end of the growth market, right? November 15, the November options expirations marked the end of the growth trade. And from there on, you couldn't produce a return in Netflix. You can see those numbers. That will tell you what the net of each of those periods if you just followed the math. And you used to be able to buy 1s and sell 10s and just mint money in Netflix. I used to do it. If it was at 1, I'd just buy it. And when it got to 10, I'd sell it because it just worked beautifully. Well, that trade is a disaster now. So look at that. You would lose more doing that than if you just bought and held it. You'd lose 75% of your value. So the question is, are we turning? If you're a serious gambler, if you have an addiction, you might try that into options expirations. Maybe it's the end of the death of Netflix. I'm not saying it is, but if at this rate, if you got a surge in demand, and it could happen into options expirations, you could make some money. But realize it is very, very risky to do.
What about SPY? Go back to the SPY one.
Okay, so you mean help me out here, Joel? What do you mean?
SPY, the spiders.
It's once again
can't
an
do that.
ETF.
Yeah.
Now we
Oh, I
have
thought you had something up there on the SPY.
Well, we use SPY as our benchmark. So
Okay.
SPY becomes the benchmark. It's an easy way to run that data. So we will always compare whatever you're trading versus SPY. So could you beat SPY? Well, you used to be able to, but you could just kill the benchmark buying Netflix at 1 and selling it at 10.
Okay.
Now you cannot. You get destroyed. Right? If you bought it on December 3rd at 1 and you sold it at 10, you lost 38%. Now the SPY only was down 20 basis points. But we're always comparing those things when we backtest data. It's just a simple way to do it. It runs really fast, and you can just check your thinking, check your math. But that's not where you want to be, right? So you have a question. Fire away.
All right, Scarjo, we'll do one from the chat. Scarjo Rabbit wants Disney, please.
Disney, okay. Yep. Also, once upon a time,
probably like one.
5.5 was a great trade in Disney. Buy the rise above 5, sell the return there. Here's where it is. Yeah. So very weak demand. It ticked off of 1, but then topped. That is, it stopped rising at 1.8. Miserable. And then the supply side jumped above the trend. So when the supply side is rising and demand cannot rise, what will it do to price? Well, all other things being equal, price will go down. And until that condition changes, you just want to watch it. Wait for the supply side to trend down and the demand side to get some footing. I like to see demand above 5 because then there's excess demand. When those conditions exist, you're going to make money on Disney. And why waste your money? You could say, well, Disney is a long-term hold. And Dennis, I know you own Disney in your long-term portfolio.
Not doing well.
So why have your money not producing a return for you? Wait until the conditions are going to give you a return. And then what should you do in the meantime? Well, don't trade that. Trade this. I'll show you. So here's what you want to trade. You want to trade stuff like this. Johnson & Johnson, demand rising, supply falling. Verizon, demand rising, supply falling. Ameren, utility, demand rising, supply rising too. Utilities are not as good as they used to be. AbbVie, same condition, but look how low this is. The whole market is 45% short. That's all that manufactured stock. They're only at 35. So that's a huge advantage. Bristol Myers Squibb bottomed at 5. That means it's a very stable, low volatility play. Again, the supply side is rising, but it's at 39%. That's very, very good. Pepsi, 5, 41, trending down. I look at all of those, look at their volatility. Most of those are less than 2% volatile. The whole market is 3.9%, the SPY. So if I want stuff that's going to produce a low risk return with low volatility, there it is. And the math will tell us that. And it doesn't matter what their fundamentals are. The fundamentals do not determine prices. Whoever is trading the stuff determines prices. And that's what we want to be aware of here.
It sure looks like Market Structure Edge is saying that the bottom is not in. It wants us to buy all these defensive stocks. And in all likelihood, that bet has been a good bet. That has been a good bet in 2022 to say the lows are not in because we continue to go lower. So basically, Market Structure Edge is saying this is a dead cat bounce.
It is, absolutely. So here's short term. Into options expirations, I do think there's an opportunity to make money because of this. Here's the demand side. It's peaking though. I don't think it's going to rise anymore unless we have a huge day today that changes the nature of the market. So you see the demand side. The supply side is really tailed off. Well, those could give us a short-term move. But I think I fear that a month from now, we could be easily 10 or 15% lower based on this lousy demand side. I mean, again, we'll say it is the worst in the data perhaps that we've ever seen. And now maybe that'll amount to nothing. But as you guys know, one of my favorite phrases is the prudent foresee evil and hide themselves. I would look at that and say, I've got a week to trade maybe, and then I'm going to be very, very careful.
Tim Quast runs Market Structure Edge. Check out the platform. Link is in the description. Tim, always a pleasure. Talk to you again next week.
Always a pleasure with you
All right.
guys too. Have a good week. We'll see you.
Let's do some ticker time. If you have any tickers for us, drop them in the chat. We can take the next few minutes and take some tickers, bring them up on the screen, give you our takes on them. Let's start with first one I see, Alibaba. I know JP Morgan is upgrading Chinese internet equities today, I believe, broadly speaking. So Baba should be up, or at least maybe. I don't know. Is it? Yes, it is.
I'd buy pullbacks. So again, it's up here today. It's had a big move off the lows. And you say, what big move? Well, 78 to 88 in 2 days is a nice little 15% move in 2 days. Let's think 50% retracement on that move. Maybe like 83, 84, you get a shot. Now you can chase it. And maybe this is the thing that's going to just continue to run. It paid to chase it last time, but I don't like chasing stocks.
If you're looking for more, continue it. You're filling a little gap here. 88.71. I mean, if you really want to get super bullish today, and you stay above. You're above Friday's high. If you stay above Friday's high, I'll give you a target of 93.86. That's your next daily high. Last time it closed over 90 was back on May 6th. So just definitely not a clean chart at all. And I don't know, pretty big area here. They're pushing it through this 88.60 level. That's a triple top here in the U.S. dailies.
A few people asking us to do Tesla. Tesla extremely quiet overnight. Extremely quiet this morning.
Bring up the chart of SPY. Bring up the chart of Tesla. We've been saying this for a long time.
Oh, yeah.
It is being you can and people keep asking me why Tesla's held up so well when ARK and all the high growth names are going down, because it's such a huge component in S&P. It is an arbitrage trade here now with the S&Ps. I mean, I do it every day. I have break trading as a pile of traders that do it every day. You're buying Tesla, just if S&Ps start going up, I buy Tesla. So S&Ps start going down, you're shorting Tesla. So the biggest thing for it was it got put in there at the high valuation, and now it's just following SPY. So unless there's company-specific news, which obviously there was in some cases, overall, Tesla and SPY move very well together.
Really not getting much of a bounce. Better hold the close here at 69.50 right here. I mean, you're 50 cents. I don't like it under the close. If somehow you catch a rally, sure, a lot of offers will be out there ahead of 800. It's just look, it's really quiet. And I'm sure, I don't know if Tesla shareholders are really happy with what's going on with this whole Twitter thing. And we're not going to go into it. But Spencer, I'm glad you don't own that at 50 anymore. And I'm so glad I'm out of that thing. What a mess. What an absolute mess. And I think that's going to weigh on the Tesla side until that's cleared up.
Entirely possible. Let's look at
Tim. He just talked the market down there.
He did.
He's like,
he
let's
spooked
get rid of
everyone.
that
He
thing.
spooked
Let's
me
cancel
too.
him next Monday. No, it's
Cancel him. Can't talk that bearish on the show, and people don't like that.
a couple more. Let's look at someone asked about Toyota. Toyota had a really rough go of it, didn't it?
This is what we're talking
week.
about.
Yeah.
Who's buying these expensive cars? Yeah, Toyota maybe doesn't have a $95,000 pickup, or maybe they do. I mean, I can't see people. I think the automotive sales, and this is still my theory that maybe, like the recession, the soft landing, forget about it. I, did call the bounce here, but it's hard to get just rah, bull, all-time highs when you've got money's going to be tighter. People aren't going to be going out some people will always buy new cars. Rich people who are well off, going to buy new cars. But your average U.S. citizen that maybe had a little bit extra money in their pocket is going to be tighter, and that is going to equal less cars sold, less new cars sold. Don't own any of the automakers. I would sell them all into strength.
What's the symbol on it? It's like 5 symbols, right?
Toyota?
TM? No.
Oh, TM? Okay.
Holy
Whatever.
mackerel,
I was
TM.
thinking of Volkswagen. I'm just going to stick with my stance, which I had before the pandemic, before any of this happened. There'll be less cars on the road. Just overall, there's just going to be less vehicles. So who's going to sell those vehicles? I don't know. But I mean, it's hard to be long term bullish any of these, even like the Tesla or these smaller EV stocks. So I don't know. I agree with you on that. And people are definitely not going to be buying expensive ones. As far as technically speaking, it's got to hold the low of the move here at 155. Here, if you're taking a shot, 155 is your out.
All right, that'll be a wrap for us. Once again, it was great to meet some of you over the weekend. Big shout out to Jeannie and Jim from Long Island. They're big fans of Joel and Triple D, and they watch us every day. So shout out to you guys.
Shout out Jeannie and
shout
Jim.
out to Jim Cruz.
We love you guys.
Great to meet you as well. I know I'm missing others. I apologize, but it was great to meet you guys. Very glad to be back. We're going to wrap the show up. Before I go, a couple of reminders. Well, I don't have a event to plug anymore, so I want to just plug our page. Have you seen this page, benzinga.com/premarket? If you haven't, check it out. Thanks to our guest, Tim Quast. Thanks to all of you who watch us on YouTube, on Twitter, on Facebook, on Twitch, wherever the heck you're watching us, on LinkedIn. We appreciate you. Thanks to our guest, Tim Quast. Please remember, as always, all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Live trading with Benzinga coming up next. Stay tuned for that. I'll catch you guys in a little bit. Good luck at the Open.
Happy birthday to
That's funny. That's cute, Mitch. Thank you very much.
To you. Happy birthday. Happy birthday to you. Happy birthday.